Hello, everyone. It's my pleasure to invite the panelists, Nikos Hadjos, Nicolás, Jover, and Elie Milky. Hello.
Hello, Aris.
Let me also introduce them. Nick Hadjos is the official development consultant for Marriott in Greece and Cyprus, and the founder and managing director of Hotelect, a boutique hotel investment advisory firm covering the Mediterranean region. Nicolás Jover is the investment director and associate of Azora, which recently acquired in Rhodes the Sheraton, a 400 keys, 5-star beachfront hotel. And Elie Milky is the Vice President Development, Radisson Hotel Group. 35. And we are very happy that your company made an announcement today during the conference that this is a record year for Radisson. Now, in addition, I think this is a very timely session because not only last week, you've probably heard that the Singapore sovereign fund acquired a big stake in the Sun Ikkos group, which was valued at $2.3 billion or euros, it doesn't matter anymore. So I think this is really a turning point for the Greek tourism and hospitality sector to have such a transaction carried out in Greece. Now, our research at the Institute, where I had the research department, shows that the brand Greece has strengthened considerably in the last few years, particularly during and after COVID. It is indicative that a study by Ipsos, the well-known international market research company, showed Greece as being one of the top 5 brands in terms of tourism markets. I would like to ask Nicolás and Elie, who live abroad, to tell us whether this is also their perception, and if yes, what are the reasons for that? Let's start with Elie.
Yeah, thank you. To summarize it, I could easily break it down into 2 points. One from the consumer angle. From the consumer angle, Greece is a very, very attractive market. It's one of the most visited countries in Europe, one of the most visited countries in the world. It has a lot to offer. It has a lot of diversity. People love it. It's got great value for money. And there's growing demand for Greece, and it's been proven in recent months and in recent years. That's the consumer angle. From the investor angle, investor sentiment is strong because Greece is one of the last EU frontiers in Europe. It's got great value for money in terms of investment, higher yields in certain locations. Investors are seeing the opportunity. And if you look at, we saw the SDR slide earlier, showing the branded supply in Greece today, but if you look at the international branded supply only, it's probably less than 1% of total supply in Greece. And that's one of the lowest brand penetration indicators on the continent and in the region. So they see the opportunity and blend these two together. You've got growing demand, you've got strong investor sentiment, and that's what's going to make brand Greece even more appealing to the global market.
Okay. Nicolás?
Well, thank you very much before all. And yeah, I mean, I think I'm going to follow at least kind of the same trend, right? And I'm going to speak pretty honestly because, well, Azora is based in Madrid. And I think I can give a very honest approach. So I'm going to start when we started looking at Greece as a market, right? Which was like 3 to 4 years ago, just when Azora sold its Hispania platform to HIP, 46 hotels, 13,000 keys. So there it was a very, unknowledge about the country. So at that point, we kind of differentiated what kind of the good things and the bad things, right? So the positive things we saw, for just a person that didn't know that much the country is, you have this beautiful, beautiful nature. You have this really long coast. You have this very diversified culture. And then you have this very warm and hospitality people. So you have everything to have like this great investment and great tourism country, right? On the other hand, obviously, we always have this negative point. And I'm going to go to your point, that is, regarding the last years and how it's changed, right? Since the global financial crisis, which hit hard the country. I think that for the people that we live outside the country, right, we kind of had a worse image of the country, logically. That kind of reflects directly in terms of the infrastructure that you have here and maybe the services. But we've seen in the last years how this is being booming, right? You've been receiving a lot of investment in terms of infrastructure. You're having, for example, the largest deal that it's very easy and everybody knows it about the Fraport deal, which is key for the tourism growth in the country. So you have everything in place, and now we are in this trend in order to receive all the investment that I think you need, together the families and the owners that you have here in the country together, maybe with some of the investors that we can help on that regard, right? So just as a last fact regarding kind of the brand of Greece, right, is you have 15,000 kilometers of coast, but you have 400,000 quays in the coast. While in Spain and Italy, you have 8,000 kilometers of coast, so the middle, the half of it. However, you have 600,000 quays in the coast. So what's happening, right? You have the double coast that we have in Spain and Italy, but you have, 50% less or 30% less quays in the coast. So I think, and just to finalize, right, there's a great opportunity to develop and to help you, kind of investing in your platform, in your supply, in your current supply. And I have to say, I'm from Mallorca, and we've lived that, right? I mean, with the help of some additional investment, I think we've improved a lot of supply and also the kind of the brand of the island, which I think is happening here now. And this is why we are all here, right? Because we are all attracted by the country and its opportunity.
Would you say, Nicolás, that the fact that we came out of the great financial crisis, although initially there were doubts as to whether we would stay in the euro or whatever, actually strengthened in the sense that here is a country that no longer has a foreign exchange risk, and it can stay within the euro system? Because, I don't know, would you agree with that statement?
I definitely agree with that. I mean, for us, because we're based in Madrid, but our investors, right, are institutional and international, and on that regard, we're actually mandated only to invest in the European Union. Mm-hmm. So if that didn't or wouldn't have happened, we wouldn't be here. So for us, I mean, I think it's very, very direct.
Mm-hmm. Okay. Now, turning to the investment environment in Greece, I would like to start with Nick. What do you see as the pros and cons of the investment environment in Greece? And we also heard in an earlier session about issues of fragmentation and also the issues about there's a low penetration from investors.
Well, I will disagree with the last part.
Okay.
I think
that's nice.
Yes, that's a good start, right? Positive. I would basically split the investment period of 2016 and 2022 to two sub-periods. One would be the pro-COVID, and then the post-COVID. During the pro-COVID period, the pros for the investors that were actually active was that you had very few investors, especially foreign investors. You could count them on the fingers of one hand. So it was great for them because they had very limited competition. Number two was that the pricing was quite competitive because Greece was coming out of the financial recession that we touched upon just before. And also the fact that the investment community was actually focused primarily only on urban hotels or 12-month operation, which in the case of Greece, it's primarily only the city locations, Athens, Thessaloniki. On the con side, there was the problem that on the flip side, there were not actually plenty of hotels on the leisure segment on the offering. The banks were not really keen to give debt for acquisitions, especially if the investor would not have a solid business plan backed by international brand and by an approved hotel operator if they were not the same. Now, going after the COVID recovery, here we have the pros there is that the market completely shifted. So before it was all the focus on the urban hotels. Now urban hotels, what urban hotels? Everybody's focusing on the leisure market, which was the first one to actually go on the rebound. So while, when we were talking to investors about, how about a nice resort in Mykonos, Santorini, or Crete, they were saying, 6 months? No.
Sorry to interrupt you, but we had the first investors in Sunny, which is a resort company.
Correct.
About, 8 years ago, if I'm not mistaken.
Correct.
And also HIP came into resorts, 5 years ago. So it's
Yes.
not only COVID. I think something else changed the perception.
No, it was. I'm not saying that it was only COVID, for sure. Okay, the Sun Ikkos deal was one of its kind, right? We don't have many Sun Ikkos, unfortunately, in Greece. So I would not take it as a comparative benchmark for how the investment market was actually doing in Greece. The HIP, yes, but that actually happened towards, I don't know if Luis is here, it was 2018?
Something of the sort, I think.
2019. So it was on the record year for Greek tourism in terms of arrivals and revenues. So coming out of the COVID, you have all the focus of the investment community on the leisure market. Then you have the banks now that are excited to give money, of course, for the right investment, even for greenfield developments, which was not the case before. Another interesting trend is that you have now more brand-approved white-label hotel operators that are willing to either manage the property or take the lease of the property. And that's very important for traditional passive real estate investors that are not hoteliers and they do want to be hoteliers. So for them, having those operators ready to either lease or manage is a great relief for them and basically completes the puzzle of the investment case that they're trying to present to their own investors. One last pro would be actually the availability of inexpensive debt through the RRF, the Relief and Recovery Fund. That's also very important, which in a way compensated the uplift on the prices, which is actually, I think, one of the main cons that we are actually experiencing right now. The price expectation between the buyers and sellers is growing wide. And I think that two main reasons is one, that the market has been doing well. And two is that we had some unusually high acquisitions that, smartly enough, of course, the hotel owners are picking on in order to say, but look at this guy. He bought this for X amount of millions. Why not mine? Which is, of course, we all know that that's not the case because you cannot compare apples to cherries.
Elie, would you like
yeah,
also, I think, again, on the point, since you've also moved into resorts, whether you would like to comment on what's making resorts more attractive?
Nikos made a very good point. The pandemic brought out two hospitality models into the limelight that have always been successful, resorts and service apartments. And you could see that in investment activity in service apartments, profitability in service apartments. And when it comes to resorts, you see it in the high occupancy and the high average rates, and in return, the high profitability margins. Yes, interest in resorts has always been, but the pandemic just reminded people how important resorts are because of the strong demand internationally. So we're feeling it. We've already, in the past 12 to 18 months, opened 3 resorts in Greece, penetrated new islands. We'll mention them later. And so for us, we're feeling it with existing partners in Greece and foreign investors from outside Greece. Now, to go back to your original point, because we could go on about this as well, the advantages and disadvantages, if I could break it down into 3 points. The reason why I like to break it down, because I tend to forget what I will say. So one is what Nikos said was about the pricing. Even though Greece is very attractive with high yields for investors, sometimes in parts of Athens, for instance, the asking price is unrealistic. And that, when you have something like that, with that approach, a deal is not going to happen. That's back to his point. A second issue, disadvantage we have in Greece, is, so on the pricing, for instance, investors are finding different ways to do investments. Either they lease assets, they lease land, they lease buildings, and then we franchise with them, or they look at other opportunities in other locations, more remote, where there's a future potential. When it comes to licensing and bureaucracy, this is something we face as investors and as operators, we face as a big issue in Greece. Having said that, banks are lending, the government is pro-business, initiatives are there to stimulate investment, and we're seeing it in the results. We're seeing it in the deals we have signed, we're seeing it in the transactions, in the mergers and acquisitions, we're seeing it in the openings. So even though this is a disadvantage, we're working our way around it and we're making it happen. So deals are happening. The third most important point is a bit more intangible. It's brand resistance. Greeks historically, traditionally, have been very averse to branding. They didn't want to brand strong local brands operating in the country. Why would you need an international brand? That is changing. There's two things that are happening in that sense. When you have foreign investors coming in, they want an international brand. These are the partners that we're partnering with in different locations, in the cities and in resorts, and this is how we're getting some of our deals done. When it comes to existing families who already have resorts and have hotels in Greece, the new generation is coming forward with a changing mindset. They're seeing the value of a brand, that we're coming to add value, not to replace any hotel, but rather to add value. That change in mindset, that change in mentality is accelerating branding in the country. So this was a disadvantage, but we're turning it into an advantage for us today.
So I think, if I understand correctly, the fact that we have more investors rather than owner-operated properties will probably also make it easier to have, make it possible, not easier, make it possible to have less of a gap between sellers and buyers. I mean, the fact that you have investors rather than owner-operators, do you see the fact that Greece is predominantly, the properties are owner-operated, something that leads to this gap between expectations of the buyers and the sellers?
I don't think so. I think it's more of an emotional attachment to a plot of land that's been in the family for 100 years. It's very difficult to give the investor a good price for the return that the investor is looking for. I think it's more of an emotional decision that needs to be taken, that is being taken by many individuals who own plots in the center of Athens, for instance, who cannot match the investor's expectations. That's the only issue here. It's just that's where the gap is, in my view.
I mean, in my opinion, and it's not a Thodas case, who 80% of our deals are sell and managed back with the family, and the family keeps running the hotels for 20 years or whatever. But for example, if we take the example of Caribbean, it's not an institutionalized market, but when you've seen that Marriott, Hilton are starting to enter the market, now all the investors in the US that are very used to go with them in the investment deals in the US, now they're entering the market. So, I don't know if it closes that much the gap, but what is clear is that it attracts institutional investment and institutional investors, which actually that is very linked to core money. So if you are finding some core money in the resort segment, that this never happened, and now it's starting to happen in the Mediterranean, as we've seen in the latest deals. I think that is very positive for all of us. That creates a lot of value, and that actually kind of compresses the yields that the investors are looking for, right? So it's a yes. I think it closes the gap, but above all, it's attracting more investment and more core money into the country, which also attracts the stability into the segment, right?
Nico, you've been around in Greece, practicing for many years. What do you think on this question?
As I said before, I think that first of all, it's cultural, and as Elie said, we fall as Greeks into the trap of the mother owl. My baby is more beautiful than the rest, and without actually looking at what are we trying to sell. The investors are looking for results. They're looking for upside potential. They're not looking for how much money have you spent to build or to remodel your hotel, or how important it is to you and your family. It's all about numbers. So for me, I think that the increasing gap, as I said before, that was caused by the market's rebound, but also by some unusually high acquisitions that have taken place, which are not the example to be followed. It's not your typical transaction, and we all know those. Have made the Greek hotel owners to want to grab from that and try to see, if they can ride that wave of high prices. And that's why I think we have seen a slowdown in the transaction side. And only now with the rise of the RRF, which in a way compensates a bit by getting cheaper money with regard to the equity returns, that will maintain the momentum, and most probably we'll have some more transactions after the end of the season.
Okay. Before we continue, are there any questions before we continue with our questions? No? Okay, thank you. Sorry, I couldn't hear you, couldn't see you.
I'll stand up so you can see me. Hi, my name is Mubarak Al Khalifa. I'm from Eagle Hills, Abu Dhabi. The question is to the gentleman who was referring to service departments. Now, I understand title deeds and ownerships vary in this region. But in the topic or in the context in which you mentioned service departments, do you usually see operators owning or selling freehold, leasehold, or do the operators or developers own the properties and simply rent the apartments as hotel rooms? Thank you.
Thank you. I meant hotel apartments, extended stay, typical service apartments that operate as a hotel operation. Well, I wasn't referring to branded residences, unless you're referring to branded residences, right?
No, not particularly.
Yeah. What I meant by service apartments is usually it's owned by one developer, by one investor or a fund. We sign a management agreement or a franchise agreement, and we operate that service apartment block as a hotel, check-in, check-out, short stay, medium stay, long stay. We operate it as a hotel, but with a different strategy. And that's what I was referring to. And it's one of my most favorite hospitality models. It's one of the most successful hospitality models because it's less risky. It's got high profit margins. It's fared better than any hotel during the pandemic. It's a very resilient hospitality investment model because of the limited F&B component, the lower staff-to-room ratio, the higher profitability, and the higher occupancy. That's what makes it really attractive.
And you're referring, in your answer, you refer to yourself as an operator strictly, correct?
Correct, yeah.
Okay, thank you. Thank you so much.
Thank you.
If I can add to what Elie said, is that right now Greece as a market, it has a almost non-existent extended stay segment. An extended stay segment the way we know it overseas, whether in Western Europe, Eastern Europe, or Middle East, or the US. And the simple reason for that is that there's no suitable supply. In order to have any international brand, whether it's Marriott, Radisson, Hilton, to put one of their extended stay labels, there must be at least, ideally, 80 to 100 keys. And for the time being in Athens, which is where the extended stay market would basically be able to have most potential, are not there. I mean, I get leads about apartment buildings that are 15, 20, 40 keys. So these basically do not make the numbers work, at least for us, and that's why I encourage them to look at other options. So, but I believe that there is actually demand for extended stay properties, but since there are not existing buildings that are available at this point, perhaps that's an opportunity for a new segment to start growing by greenfield development.
Okay. Okay, can't see anybody
We
else.
can talk about that later. We'll talk about that in more detail later on because it's a very important discussion. There's a huge opportunity. Yeah.
Okay, Nicolás, we woke up today to the news that the pound fell within 20 minutes by 5% almost when the markets opened. And we all know that the European markets are not in a good shape, their economies. What do you see also? I guess you have the same issues in Spain because to a large extent we share the same product and the same markets. How do you see the next year and the years after?
I mean, I have to say I would love to have positive news, but finally, this is where we have to share ideas and comments and feelings, right? And the different matters that we all know, there's like this very high inflation, utilities, these really high unemployment rate. So there's a lot of pressure, low unemployment rate. So there's a lot of pressure on the also payroll expenses, which is very important. It's 5% across Europe, when in 2007 it was 7%. So there's much more, pressure on that. So that is reflecting obviously directly to the kind of disposable income of all the regions, right? And especially in the source markets that we have here and throughout Europe, the Mediterranean actually, right? In Greece, in Italy, Spain, we all are affected by the same countries. So our approach to that and our way of tackling that is, we have to be a little bit more conservative for the next 2 years, at least in our perspective. What we believe is that in 2023, there won't be so much ADR increases. We do not believe there will be a decrease.
What about occupancy?
But it won't absorb all the inflation that we are seeing and that we've seen this year. This has been an amazing year for everybody. We own 33 hotels. I mean, Portugal, Italy, Spain, it's been a very good year. But, fortunately, we don't believe this will be happening next year. Occupancy will be affected. People will still be traveling, but will be traveling a little bit less. And GOP margins obviously will just fall because ADR won't be absorbing all the inflation that we have in the main lines of expenses. I've already touched upon the salaries, but utilities is just an obvious another item. Also, the F&B cost is just crazy, right? How much is increasing. So, Azora's approach on that case is taking, if we take as a reference the GOP of 2019, 2022, which have been pretty similar, we would take off 15 to 20% with this assumption. So that obviously affects valuations together with interest rates. I mean, swaps are at 250 basic points, and in the US 300. That's directly a higher cost into your debt, and you have to leverage, and you have to cover on that swap. So with these two elements, same target returns, I think Luis also touched upon this, we have a direct effect. However, Azora has been investing for the last 10 years in the resort segment. So we are really believers, and we are kind of long-term investors. So we're not going to stop investing. There are a lot of investors that, because of these reasons, are just waiting and see. It's not Azora's approach. We're going to keep investing. We really believe in the mega trend, in the leisure and the resort segment, and for sure in Greece. So,
okay. So last question for all of you. You can see the clock. You have just under 3 minutes each. We've seen that brand Greece has improved and is strong at the moment. We've seen that the economic environment in Greece, we've made certain positive moves. We've seen the differences between cities and resort in terms of attraction and the dark sky, let's say, for the next 2 years, but better afterwards. So all of these, how do they affect your companies or your clients' plans, and what do you see for your future? How do you see your companies developing? Elie, let's start with you.
Yeah, I think we currently stand at, by the end of the year, 8 hotels in operation, hotels and resorts in operation and development. 6 of these deals we signed in the past 24 months alone. Mm-hmm. So we've come a long way since we launched our strategy 3 years ago, signing our first deal, the first of the 6 deals during the pandemic. And since then, we've penetrated Santorini, Mykonos, Skiathos, with our core brands, Radisson Blu and Radisson. We've found creative entrepreneurial ways to get deals done. We have done more deals in Athens itself. We've signed a property, a Radisson Red Lifestyle Hotel in Metropolia Square in the heart of Athens. We're about to sign a second one in the heart of Athens as well, to be announced soon. We've got one coming up on Voukourestiou Street. Athens is big for us. We're not only looking at Athens, we're looking at the main cities of Athens, Thessaloniki, Patras. We're looking at the mainland destinations, leisure destinations on the mainland, and the islands as well. We aim to have around 30 hotels in operation on development by 2030. It sounds ambitious, but I'm inspired by my friend, my colleague here from Marriott, who's reaching those numbers. And I think it's very, very possible. We're looking at different sectors of the different locations and different segments of the economy, of the branding scale. We're looking at economy and lifestyle. We're looking at mid-scale. We're looking at upscale in the 4-star category. We're looking at upper upscale and luxury as well. And we see an opportunity and we like long-term investors because it works for us as well. And there's a huge gap in the market across all these segments. It's not because we feel like putting a hotel, but because there is an opportunity. That's how much faith we have in Greece, and I think that's a target that we would like to achieve in the next few years.
Nicolás?
I mean, in our case, I'm going to kind of insist on what I said. Our approach is a little bit more conservative in terms of the business plans. However, our beliefs are really, really, strict and very clear. We like Greece. We like resort segment. We're going to keep investing. We've invested in the last 2 years 1.2 billion across Europe in the resort segment. That's 90% of our portfolio. We still have to invest 600 million. We definitely want to be here, and especially in Greece. Luis mentioned the difficulties that has the country to invest. We've been pursuing the market for the last 3 years, and in the last year, it's been the only moment that we've done a deal, and that's because we've partnered up with Xenios Investment. He's our branch here in Greece, and they're helping us to understand all the particularities that actually the country has. So, wrapping it up, we definitely gonna keep investing in the country, doing sell and manage back, sell and lease back, or even just vacant possessions. But we're very used to working with families and trying to do value-add opportunities. We like a lot of capex and any complex situation. So, we are not really afraid of the particularities of Greece, and we understand them, and we actually are Spanish, so pretty much the same, right?
Nico?
Okay, well, as my friend Elie said, I think that we were brave enough, or somebody would call us crazy, back in 2016 when we decided as a company to be the first international hotel chain that would place a developer in the country. And I think that paid off, as Elie said, with a lot of work and persistence. We managed to be the #1 international hotel chain in Greece with the best signings for the last few years, especially before COVID. And our appetite hasn't stopped here. We just opened this May, the first Moxie in Athens, an amazing property, which I want to believe that it's going to be flagship for not only Greece, but also Southern Europe, in the heart of Omonia Square. And we opened the first W in Greece this August. And our appetite basically is not just focused right now only in the full service and luxury, where we predominantly kept signing and opening up new hotels. We see that there is a significant potential, as Elie said, on the upscale, on the upper mid-scale, and mid-scale. So, I mean, in Greek 3 and 4-star properties, there is a significant gap there. And especially now with the next couple of years that there is some uncertainty, I think these kind of brands on this price point will definitely be very attractive, both in terms of investment, but also in terms of customer preferences.
Mm-hmm. Well, I wish you good luck. And
Thank
I
you.
think what also comes out from what you said is that despite all the obstacles that may exist, there is a way to tackle them and get along.
Well, I can say one thing that to touch upon what Nicolás was saying for the cloudy days that in general we're expecting. The US this year had a record year of arrivals as per the...
You mean Greece from the US?
US travel coming to Greece, yes. And for companies, and again with the foreign exchange rate of 1-to-1, that's a tremendous competitive advantage that companies like ours have, being an American company, because although the Europeans might suffer with the disposable income being compressed to different extents, I guess, depending on the country, in the US things are, I think, slightly better. And with the eagerness and desire of the American traveler to come to Europe, and experience not only Greece but in general the different European travel sites, I think companies like ours that have so much presence in the U.S. and U.S. travelers anyway have proved in the past that they are loyal to the brands of their home country. I think we would have a competitive advantage also developing ourselves during the next 2-3 years.
Okay. I think we're done. Thank you very much.
Thank you.
Thanks, guys.